Oil prices are advancing this morning after US President Joe Biden wrapped up a landmark visit to the Middle East without a firm commitment from key producer Saudi Arabia to boost crude supplies. WTI is now trading at $98 a barrel and Brent at $102 a barrel. And while a US energy envoy says he is confident that Gulf producers will raise output, local ministers maintain that policy decisions will be taken according to market logic and within the OPEC Plus coalition, which includes Russia. Meanwhile, EU investors are still worried about the resumption of gas supplies from Russia after Kremlin-controlled Gazprom said it could not guarantee the safe operation of a critical part of the pipeline that runs under the Baltic Sea to Germany because of doubts over the return of a turbine from Canada. Now, let's try and make sense of all this with David Madden. He is Equiti Capital market analyst. David, many thanks for being with us this morning. First of all, Biden's trip to the Middle East, very controversial for now. Even US media have been very critical of it across the board. Has Biden achieved anything, in your opinion?
The only thing President Biden has achieved is to kind of basically prove how in this regard, how weak his administration is. Even though the United States is currently the largest producer of oil in the world, it has quite rich oil reserves in the form of the Strategic Petroleum Reserve. They were calling on other people, most notably Saudi Arabia, to actually ramp up production. And you can see why the likes of Saudi Arabians and co haven't committed yet, and it doesn't look like it that they're going to be in any rush to ramp up output. This is something I've been saying about the Middle Eastern states for some time. Although I think they might run the risk of overplaying their hand. Although we have seen the price of oil rebound in the past couple of days, it's worth noting late last week we did see oil fall to a 5-month low. Things are starting to kind of trickle through in terms of fears about demand for oil. Because if we look at the wider commodities market, silver is recently hit a 2-year low. We've seen copper at a 18-20-month low. The metals market is telling us that commodity traders are fearful for global demand, hence why we're seeing hard metals fall. We haven't seen that same sharp decline in the likes of energies because of supply concerns. And obviously the likes of, say, Saudi Arabia and co want to keep the price of oil high. But if they keep it too high for too long, they could add to the inflation that countries all over the world are experiencing, which will probably chip away at global growth and then in turn demand. So I think although oil is kind of lagging behind silver and copper in terms of its declines, I think the more medium-term, broader bearish trend for oil is here to stay.
Right, the turmoil across the board when it comes to commodities, really, David. And let's go to Europe as well, because Nord Stream 1 is supposed to start operating again later this week. But European governments really are worrying that the shutdown might be extended because of the conflict in Ukraine.
Yes, indeed, and they've already been making preparations for the possibility of Moscow turning off the tap, as it were, gas-wise, as winter is on the horizon. We're not anywhere close to it just yet. But the very fact that European leaders are thinking along those lines sent kind of ripples throughout the financial markets. We've seen weakness in the euro recently. We've also seen weakness in particularly, say, the German stock market and other eurozone economies. This is something that could easily turn into a very political situation, even though on the face of it, it is very much an energy contract. It is a two-way street in terms of Germany being dependent, countries in the eurozone like Germany being dependent on Russian energy, but also Russia being relatively dependent on actually receiving those gas receipts. So actually, absolutely, a complete hold for a very prolonged period would commercially and economically hurt both sides. But I think it is a possibility that this entire Nord Stream process may drag on a bit longer than originally thought, and that energy uncertainty hanging over the likes of Italy and also Germany will probably kind of put pressure on the relative stock markets.
Absolutely critical right now. Many thanks for this interesting update, David Madden.
Thank you.